Global financial markets are reacting sharply today as the escalating war involving Iran, Israel, and the United States continues to drive volatility in energy prices and investor sentiment. The biggest movement is coming from oil markets. Crude prices climbed again during Monday's trading session as investors reacted to the ongoing conflict and the risk of disruptions to shipping through the Strait of Hormuz. Brent crude remained close to the $90 per barrel mark, while U.S. benchmark West Texas Intermediate also traded near similar levels, reflecting the geopolitical risk premium now built into energy markets. Energy analysts say the fear is not only about current disruptions but the possibility that the conflict could expand further across the Gulf, potentially affecting one of the most important oil transit routes in the world. Nearly a fifth of global oil shipments normally pass through the Strait of Hormuz, making the region a critical pressure point for global energy supply. The surge in oil prices is also putting pressure on global stock markets. Across Asia, several markets traded lower as investors reacted to rising energy costs and geopolitical uncertainty. Export-driven economies such as Japan and South Korea remain particularly sensitive to oil price spikes because of their heavy reliance on imported fuel. In Europe, trading has also remained cautious today. Investors are weighing the impact of higher energy costs on inflation and economic growth, particularly in industries such as transportation, aviation, and manufacturing that rely heavily on fuel. Meanwhile, in the United States, stock futures moved lower earlier in the day as investors continued monitoring developments in the Middle East. Market participants are shifting towards safer assets while energy companies have seen gains as crude prices climb. Currency markets have also reflected rising uncertainty. The US dollar remained relatively strong against several global currencies as investors sought stability amid geopolitical risk, while commodity-linked currencies have shown volatility due to fluctuating energy prices. The broader concern among economists is that if the conflict continues to threaten energy supply routes in the Middle East, the world could face another inflation shock. Just as many economies were beginning to stabilize after years of high prices. So today's global market reaction reflects a familiar pattern during geopolitical crises: rising oil prices, cautious investors, and financial markets closely tracking every new development in the Middle East.